What's going on, everyone? Happy Thursday. It is July 25th, and it's time for another mortgage rate update. We're going to take a look at the markets and look at what's going on because everyone's talking about the Fed announcement for next week. So let's jump in first and talk about how the Fed announcements affect interest rates. Number one, when they talk about raising or lowering interest rates at those meetings, it's not the actual interest rate that they're lowering, not your interest rate, not your 30-year fixed interest rate. They're talking about changing the rate that the banks borrow money at. So when they talk about lowering rates a quarter next week, because that is what's anticipated, it doesn't mean that the 30-year fixed is going to go down 0.25%. So you have to look at mortgage rates as following kind of like a stock does. So when we hear the news, the market hears the news that the Fed is anticipating lowering rates by 0.25% at their next meeting. What would happen if you heard that type of news with a stock? So if a publicly traded company says, we're going out of business in 3 months, would you sell your stock now or would you sell it in 3 months? You would sell it now and so would everyone else. As soon as you hear the news, you react. It's no different for mortgage trading. So with mortgage-backed securities, that's what's going on our end as well. As soon as the news is announced and what's anticipated is expected, you react now. So assuming they do lower rates a quarter, we're not going to see a lot of movement next week because it's already kind of built into the market. We've already expected that. If they surprise us, that's when we see volatility. So all that being said, let's jump in and take a look at what's been going on with mortgage rates and where we're at today versus the last time we did one of these videos. All right, so as always, we're looking at the 10-year Treasury because this is the most publicly available information to you guys. So this is the best gauge you have of what's going on with mortgage rates. And what we're looking at right now is a 3-month look back. So basically what you can see is rates have been the lowest they've been in 3 months. This is a good area. But you know me, I'm always looking for patterns. So if I look at just the last, 7 to 10 days, what do we see? We see that this being today, we have a line here that I'm going to call a floor that is preventing rates from going down further, right? But at the same time, we have a ceiling, which is preventing rates from going upward. So we have a very narrow trading window right now, which to me is pretty normal when we're coming to these meetings because the market doesn't know what to expect. So that's kind of what I'm looking at. Now, where are we with mortgage rates compared to where we've been in the past? So let's do a 2-year look back. Now what you see, if this is us right now, we are better than we've been in a long time. And what's happening with the media is they're telling you that rates are the lowest they've been in the last 2 years. And that's almost true. So what you can see is the 10-year is 40 basis points lower than it was 2 years ago. Now, that's a great gauge. It's very decent. It works. But let me show you what's going on behind the scenes with mortgage-backed securities. So if we look at the Fannie Mae 3.5 coupon, I'm going to get rid of these lines for you guys because we don't need them for now. Basically what we're seeing here is kind of the same trends. So they do correspond. What you'll see with this is that rates, the mortgage-backed securities go up. So when I'm looking at this chart, up is a good thing. That means rates are going down. So we're looking for those same trends. So what do we have? So if this is today, you can see that, and we want to go up here, we have another ceiling. We've hit this 102.6 line today, and then we immediately bounced off of it and came back down into this range. So if I draw a line off of this, you'll see the same thing. We have this ceiling that's preventing rates from going down. And it doesn't make sense that a ceiling would prevent rates from going down, but remember, this is inverse to what you would think. So what's going to happen in the future? Well, here's the same thing we saw in the 10-year. We have a level that is going to that should protect us somewhat from rates going higher. So I would call this our trading window. And what's really interesting is we've had this same little window for about 38 days now. It's very rare that we see rates stay this steady for that long. Now let's go back and do the same thing and see where we are in the last 2 years. A little different than the other chart we looked at. You can see that we are at the closest levels to being the best, but there was a big gap on the 10-year Treasury to where we are today over the last 2 years. With mortgage-backed securities, you can see we've been a little lower. Higher, which means rates were lower. So you can see we have a little bit of room. But long story short, in the last 2 years, we're seeing the best rates we've ever seen. So what does that mean for you? If you're buying a home, I always say this, rate is a means to an end. If you buy today and rates go up, you're really happy you have the rate you have. If you buy today and rates go down, we just refinance. So everybody who purchased a home in December and March right now, rates are lower. So I'm refinancing all of my clients that purchased their homes earlier this year or even last year. We're always able to take advantage of the market. There's no prepayment penalties. You can pay down your loan as much as you want. You can pay it off at any time. You can refinance whenever you want. So don't worry too much about the media and the news. Long story short is we worry about what we can control, and we let go of what we can't. We can't control the media. We can't control the Fed announcement next week. But what we can do is look at the data to make a very educated decision. And my job, in my opinion, is to help guide you to choosing the best interest rate. So when you're looking at getting the best interest rate, this is how we do it. We have to use the data. You shouldn't be just getting one quote of a rate, because there's multiple rates available every day. So make sure you understand. And by just watching this video, you already know more than most mortgage agents do. It's what it is. So if you need anything, if you have any questions, call me, text me, email me anytime. I'm happy to help any way I can. Thank you guys so much. I'll talk to you next week. Cheers.